Hi, and welcome to this episode of Market Trends. I'm your host, Matthew Carr. As you know, Americans are practicing social distancing. We're working remotely, we're avoiding large crowds, we're told to hunker down. The question is, though, for how long? For investors, especially those approaching or near retirement, this is a key question. They need to know when to expect the markets to recover because time is of the essence. Well, I'm here to tell you, the wait may not be as long as you might think. Some of the most dangerous, most expensive words in history are "this time is different." And though we are in a bear market, it's important to understand that there are different breeds of bear market. There are structural bear markets like we saw in the 2008 financial crisis. There are cyclical bear markets, which we see on a regular basis. And then there are event-driven bear markets, which are caused by some sort of external shock. Let's talk about the 1973 oil crisis, maybe a war or some other event such as a global pandemic. And that's what we're in right now, this event-driven bear market. And of all the breeds of bears, this is the one that you actually want to be in because it is the shortest lived. Event-driven bear markets recover much faster than any other bear market. In fact, of the 6 that we've been in since 1960, the average duration is 418.4 days, which is, you can roughly 13.75 months, or we can go ahead and just round that up and say 14 months. That's considerably shorter than the period of times that we see from structural or cyclical bear markets, which will last 20 months or more into several years. But there is one last piece of data I believe investors really need to be aware of. And that's this idea of miserable Mondays. The lasagna scarfing cat Garfield, he famously hated Mondays.
What could be worse than Monday?
And so do the markets, especially now. When we get into these event-driven bear markets like this, the weekends become some of the most treacherous terrain for investors. Even though the exchanges are closed, there's no trading going on, the news flow doesn't stop. Right? That we still hear these stories. This creates tension. This creates anxiety, and all of that is unleashed in a fury on Monday. Of the 13 unluckiest days for investors of all time, 5 of those have taken place on Monday. In fact, those include 3 of the largest losses on the Dow of all time. Black Monday isn't just this one-time event; it's on repeat. We've suffered 2 Black Mondays just in March 2020. And since February 10th, the Dow has fallen 5 out of 7 Mondays that we've seen. So Mondays have been these really wild rides, including 3 of the largest drops the Dow has seen in history have taken place just over the last couple of weeks. So this has been a very historic, tumultuous market. Now, I may not know when the great toilet paper shortage of 2020 is going to end. I may not know when the number of COVID-19 cases are going to peak either here in the United States or globally. But I do know that event-driven bear markets, like the one we're in, that's been triggered by this global pandemic of COVID-19, is the shortest duration of decline that we typically see. So the road ahead will be bumpy. Investors definitely want to be wary of Mondays, at least until the number of cases of COVID-19 peak. But the good news is, you're not going to have to wait years for recovery. You're merely going to have to wait months. Thanks for watching this episode of Market Trends. Be sure to subscribe to the channel and drop a line in the comments. Thanks for watching, and I'll see you next week.